Always say that it's love.
Hello.
Hello, we're starting in a second. How are you doing today?
I'm good. How are you?
I'm doing well, thank you.
Mhm.
You have to give Ben the computer because they're gonna.
Hello,
Hello, you're there, Joe?
I am here. How are you?
I'm doing well.
What do you think?
1 second. I'm trying to click into something else. Oh, I like. We have today we have with us Erica, Renika. I think you pronounce it Dylan.
Yes,
Um,
yeah, that's correct.
I need to. Can everybody mute their mic, please? I hear a whole lot of talking in the background.
Mama, this thing is so boring.
Ben, I don't know.
I mute your mic. Don't worry about it. It's done. So how you guys doing today? Joe, I can barely see you. It's very dark where you are.
Hold on, let me rearrange.
Yeah, you must have been setting opposite of the sun.
Yep, it's done.
So how you guys like enjoying the day so far? I hope it's you have been enjoying it. It's enjoyable to you because it has certainly been enjoyable to me. I thoroughly have been enjoying it. Now, when you have a question, you can put your question in the chat. You see a little box down there that says chat. Put your question there, as well as then you have to mute your unmute yourself. You can hear your question, okay?
That's all right, I'm good.
Okay, we got to mute her. So, Joe, right now we have 4 wonderful people joining us on this webinar, and some other ones will come in as we talk. And so, not to hold everyone, I'd like to introduce myself. My name is Vita Rice, a realtor with Bennett Realty Solution. I've been doing this thing for quite a while now. Love it, love what I do, love helping people. Particularly, I love, as Joe knows, first-time homeowners because they have a special place in my heart. Because I love how excited they are when they finally reach their goal of obtaining a new home. You know, that being said, I'm not going to go into my long spiel about me, but we will at some point, but not right now. But however, Mr. Neosi over there smiling, I'm going to introduce him first so he can tell us all about the process of obtaining a mortgage, what you need to obtain a mortgage. You'll also be speaking on the conditions, the conditions of real estate right now, as from a mortgage perspective, you know, and everything you need. And like I said, any questions that you have, put them in the chat box, or if you raise your hand, it's a little thing where you can raise your hand. If you raise your hand, I can unmute you so you can ask your question, okay? So with that being said, I would like to introduce Mr. Joseph Neosi. He's been a mortgage expert for over 30 years. He's been doing this for a long, long time. And so he knows all the ins and outs, and he can tell you everything you need to know about obtaining a mortgage and how to get you into your new home. And so, Mr. Neosi, you can go.
Thanks again, Vita, for introducing me with some really well-spoken words and very nice words. I appreciate it.
Thank you. You're welcome,
Uh,
Dr.
Thanks everybody for attending tonight. We're going to go through a process tonight of pretty much A to Z. And the A part of the A part of the alphabet is the first letter. And the M part of pre-approval for a home loan, the mortgage part, is the first letter when it comes to what you need to do in order to find out how to purchase a home. It all starts with the mortgage, okay? Now the reason why, pretty simple. If you don't qualify for a loan right now, there's no need to start shopping right now. If you do qualify for a loan right now, you need to know what that buying power is. And during the mortgage pre-approval process, we determine what your buying power is. And then Vita has an idea of what the buying power is. She can then focus on locations where the prices are right where you're pre-approved for. And you're not going out looking at homes that are worth what are they're selling for way more than what you qualified for. In essence, it all starts with the mortgage process when you buy a home. Okay, now let's talk about what that process entails. Excuse me. The process entails reviewing of your financial position to determine where you are with credit and with your job position, your income, okay? So let's talk first about the very first thing that we deal with, excuse me, which is credit, okay? We're gonna look at your credit report, we're gonna pull the credit, and we're gonna see exactly where you are with your score. And not only the score, just so you know, when we review credit, we're looking at the body of that credit report, what's really in it. Some people have a very high score and they don't necessarily qualify for a mortgage. Some people have a lower score and they do qualify for a mortgage. So, and I'll give you an example of that in a little bit. So we look at the credit, and in the body of the credit, it has what your trade lines. What a trade line is things like a credit card or a car payment. These are trade lines. Specifically, what we're looking for are 3 trade lines that are over a year old, preferably with no lates. So in the event that we look at that and we see that, and the credit's in good shape, we then move forward requesting documentation from you. The documentation that we're requesting is directly tied into your past. So we look at 2 years of your W-2s. Right now, that would be 19 and 18. And just so you know, the difference between a W-2 and a 1040 is the W-2 is what is provided by the employer at the end of the year. And it gives us what your total income was. And you use that W-2 and then move forward and file your federal tax returns, which are the 1040s. We're not worried about the federal tax returns unless you're self-employed or unless you go with a USDA product, which is a rural development, which we'll also discuss as we move forward when we get into the product segment. So credit score specifically, we look at that. But let's say, you're one of these people that, want to go out there and just, you only want one credit card, you pay it off every month, you've had it for a couple years, and you're really good, but you just don't want to extend yourself. We look at that as somewhat thin, meaning it's not 3 trade lines, it's 1. Depending on what else is in that body, we may be able to move forward with just that, but typically, we then move into an area of what's called alternative credit, okay? So let me give you an example of what alternative credit is, because believe me, in some cases, this can really, really assist you, specifically if you're renting where you are. So let's say you're renting where you are, and you pay that rent the first of the month, every month, and you document it, meaning you're not handing your landlord a handful of cash. In other words, in the mortgage business, cash is not good. Documented means we can see it coming out of your account. You pay it every month on time, and you've done that for the last 12 months. 12 months paid on time, not reporting to the credit bureau, is an alternative trade line. Now, assume most of you are paying rent. So we already know you're paying a mortgage. It's just not yours. If it's not documented, I would encourage you to start the process of making sure that you have documented rent to be able to validate that you make a rent payment. Other things that we use for alternative credit are, car insurance. Car insurance, you pay it every month, most of us, comes directly out of our account. It can't be late because you can't drive without car insurance. Don't want to risk it being canceled or have an increase. So that's a steady thing that comes out every month that you can also use as a alternative trade line. Cell phones, utility bills, daycare, gym memberships, although I guess right now there's not a lot of that being paid with the pandemic. But outside of the credit report, things that you pay that'll make you go from thin to thick, we look at that. Very important. One of the most important of the three is obviously documented rent. That documented rent is very, very strong for an underwriter, because an underwriter who approves your loan, because it shows again that you're paying a mortgage, but you're not paying your own mortgage, you're paying somebody else's mortgage. So I know that that's something. While most of us are on the phone, on this podcast presentation, you're most likely paying rent, and you're just getting tired of not building your own wealth, and you're not doing things for you. You're making somebody else wealthy, and that's called your landlord. And hey, look, you do get something for that called a roof over your head, but at the end of the day, you're not building anything or any legacy for yourself, i.e. what home ownership will bring to the table. Okay? So once we have all those documents, we put it all in, we've covered the alternative credit if needed, and we now ask for 2 months of bank statements, 2 years of the W-2s, going back to that, and 1 month of pay stubs. What we're looking for is consistency in the job. So we see 2 years, you've been at the same place, great. Let's say you changed jobs last year. So long as you work in the same field, we're okay with that, okay? So we got to be able to make sure you're not switching from one career to the next, some stability on the job. The pay stubs reflect consistency of pay. Right now, that's really focused on. Because why? Because a lot of people's pay has been reduced due to the pandemic. They may be getting their base salary, but they're not getting overtime. Just things, they may have gone to a 4-day work week. We need to examine that, because you may have a base salary of $100,000 a year, but if you haven't been getting that, you've been at 50% pay, when will it go back to the regular salary? When will things change? And this is it's a situation none of us have experienced. So I will say, as this progresses, and it looks like we're going back to reopening, and people are going to getting back to full time, and hopefully people will go back to work. But we need to focus on that income if there has been any change. If you've been if you've been blessed enough not to have any changes, we look at the pay stub, we analyze it, and we use that income that's in there. That point in time, we come up with what we look at as a dollar amount. And normally where we are when we start that process is we look at the maximum dollar amount, maximum sales price, maximum home dollar amount that you're going to be able to afford. And then we talk about the potential payment for that. Okay? So a lot of people might qualify. Several people recently qualified, but they're a little scared right now with the pandemic. They may qualify for $350,000. I go in there and I say, yeah, well, you qualify for $350,000. Here's an estimated payment. Oh, no. I don't want to pay that high. I don't want to pay $2,200 a month. I'd like to be more in the $1,800 a month range. And Vita and I look at that together, because both of us want you where you're comfortable with that monthly payment. So then we back down the sales price to meet that. Now, that monthly payment. Now, when we do that, we certainly let you know You do qualify for more, and I have to let Vita know that, because Vita, how often do you see people that get out there at 250 and they qualify for 350 and they see a 250 house and it really doesn't quite cut it? I imagine a lot, Vita, because I know that we,
A lot.
yeah.
Quite
And,
often.
you know, when I look at your bank statements and I see you're shopping at Nordstrom, you know, I see that you like nice things. And so there's a big difference between a $250,000 house and a $300,000 house. There's a big difference, not a huge difference in the payment. That basically it's $5 per thousand. So you will see an increase per thousand at 250. Every thousand it goes up, $5 more to the payment. However, huge difference in that product between 250 and 300. So at the end of the day, we want you happy. Sometimes that's a tough fit because you want your payment to be at one number, but you absolutely want to be at a higher number when it comes to the quality of the home that you're looking at. That's where Vita comes in. Vita will show you that and go over that with you in great detail to make sure you see the difference and you see the quality and you understand exactly what it is. Sometimes it's a matter of, you know, not a whole lot extra on the monthly payment. And then I give you an estimate on that, and then, okay, you know, I'll look more into that price range, okay? Now, when we're doing that pre-approval, we're coming up with the dollar amount, and we reviewed your bank statements, and we see where you are. In some cases, to be able to move forward and purchase a home, it may require that we find a down payment program for you, okay? Down payment programs are not for everybody. You have to qualify for them. It's so a lot of them are geographically located. One that we spoke about, which is a USDA loan, Rural Development. It's a great product. Kind of moves you out a little bit. You won't be out rural, meaning you're not where you can walk to the metro station. However, you know, let's say you're looking in Prince George's County. Let's say you're looking in Baltimore County. Some of those counties in the rural areas will let you get in for no money down. It's a great program. It's very similar to a VA loan, okay? It's a no money down program. Again, you have to qualify for the loan. Look at it this way. If you can't get a mortgage, you can't get a program, okay? So all the programs that are available are after you get pre-approved for a home loan. And it's an in addition to, it's assisting you in terms of monies or no money, like the 100%, but monies that are available through the state of Maryland, through individual counties that'll assist you in the purchase of your home, okay? So that's all part of the pre-approval process. We want to zero in on that. Well, you know, I need to let you know, and Vita will support this, I know. Programs have pros and cons. The pro is you get some money. But if you're in a competitive bid for a house, it may not always work to your best interest to have a program because they take a little longer to settle. So the sellers look at them. And maybe the seller doesn't want to see somebody that's saying they need down payment money. That's something that Vita will work out. A lot of times what she'll do is make the offer a little bit higher and say no closing help. If we use all that money from the program. I mean, she has her way of, nobody negotiates like Vita. And I'm not just saying that because we're together here. She's a very tough negotiator. And when she negotiates for you. So there are ways to make it work, but they're not always the most attractive thing for sellers. And you need to know that. And as we discuss it during the pre-approval, we'll go over that again. If you make a lot of money, you know, these programs are based on need. They're not for everybody. Kind of like student aid when you go to school. Some qualify, some don't. There's a needs analysis. That is done when I do the pre-approval, okay? Different products that we have. We have what's called an FHA loan. We have what's called a VA loan. And again, we already discussed the Rural Development Loan, USDA. These are government products. What does that mean? The federal government endorses the products and they guarantee them through either mortgage insurance or upfront funding fee for VA, which is added on the loan. So is the mortgage insurance. And what it means is the federal government says that you, the buyer, meet the criteria to qualify a loan that they're going to guarantee, meaning less risk to the lender. Why? Because if the federal government is saying to me that if you default, okay, if you don't make that payment and that house goes away from you, you're not the owner anymore, they do what's called a foreclosure, then the lender gets paid. Okay, the lender gets paid. So it reduces the risk, and when the risk is reduced in all facets of the mortgage, then the interest rate is lower. So your government loans have lower rate than what we call conventional loans. Conventional loans are purchased by Freddie Mac and Fannie Mae. They're the largest in the country, in the world, and they're conventional financing. Conventional is a little bit different. They're normally for higher credit borrowers, and they can eliminate mortgage insurance. Some of them it can be eliminated depending on the credit score with as little as 3% down. So they do take a little bit more of a risk, but of course, when we talked about risk earlier, the risk is lower on a government loan. It's lower, but so therefore, because they're guaranteeing it, but therefore the credit, I mean the interest rate's lower. Vice versa when you get into conventional, because if you're not paying mortgage insurance and you're not putting down the same down payment of 20%, then guess what? Your rate's going to be higher. When we talk about interest rates are determined by risk. The lower the risk to the lender, the lower the rate. Well, what determines risk? I already said the federal loans that are guaranteed. Down payment. The higher the down payment, the lower the interest rate. The last thing that we look at is credit score. The higher the credit, the lower the interest rate. That's how we determine everything that we do. Once we enter in and we have that pre-approval, moving on. Once we enter in and we're done, we've decided on programs, we've decided on pre-approval, dollar amount, we issue what's called a pre-approval letter. I just want to touch on this briefly. There's a big difference between what's called a pre-qualification and a pre-approval. Pre-qualification, I have an online app, and you go on and do the online application, and what you put in there, a letter can be issued. But that's not always accurate information. And the letter doesn't say any information's been reviewed on a pre-qualification. Pre-approval is the strongest letter that VITA and most of the agents would like to have prior to driving you around. They want me to review your documents. They want me to get in great detail for everything that you're doing. We have just a lot of different things on that note that we need to do for you so that you get a strong letter. When you go out there, you want to present that letter and make sure that it is extremely strong so that when you make your offer is in a strength position, okay? Let me just say this to you. The first person they're going to call when you make an offer is me, okay? Why? Because I'm the one that issued that pre-approval letter. And they're going to validate with me that everything that you've said is accurate, is on point. And everything that I said, in the letter. So I got to be able to say with great certainty, yes, this is a good buyer. Yes, we will not be delayed. Yes, yes. And I'm going to yes them to death because our whole objective is, number one, I've looked at everything. There's nothing there that's hidden. I've looked at everything. And at that point, VITA makes the offer. They go back and forth. Maybe a counter here, she'll get into all that process. But once that contract's ratified, we then have a deal. Now we got to get busy because we have to get all the third-party numbers, and all those numbers are tied together. Third party means that when you go to closing on this, you have two cost centers involved in your deal. Number one is the down payment. We kind of talked on that a little bit. Depends on the program. USDA, VA, no money down, okay? FHA, 3.5% down on the sales price. Conventional, 3, 5, 10, all those numbers, whatever we decide down payment wise. we then get into what we call that's one cost center. Now the second cost center is the closing cost. So what closing costs are when it's separate than down payment, two separate cost centers. Closing costs are taking the loan out of taking the property out of the seller's name and putting it into your name. That's when you settle on the loan. It's when you get your keys. There are third parties involved in this transaction. In other words, there are people out here such as appraisers. They're a cost to you. Transfer taxes, the state and the county or city, they tax that transfer of the property. We need those numbers. You have title companies, title insurance, survey numbers, a lot of surveys, the boundary of your property. We have to get all those numbers. And my job is to get those numbers for you so that when we look at it and we add in the closing help, the seller may help pay because Vita will negotiate and try to get the seller to pay some of that, if not all of it, depending on how many offers are made, the closing costs. But what I'm after, once the contract's done, is your bottom line. And that's also after we've selected a down payment program if we're going that way. So what is my bottom line? That's what you need to know. Okay, here's where we are. This is your bottom line. You're comfortable with that. We then go lock your interest rate in whatever program that you were looking for. And then we move forward with the getting the loan application to you. You sign that loan application electronically because why? When we lock the rate, you know your payment, you know how much cash you need to bring to the table to settle, you know your interest rate, you know everything you need to know about the loan. We're done with that. And then you move that loan into what's called processing. The processor's job is to order what's called a VOR. They verify your rent, VOE, verification of employment, order the appraisal, and he reviews all the docs. And if there's additional things they want, they ask for it. Normally that happens 2 to 3 days after the package goes to them. From the date of application, you can't order the appraisal for 3 days. That's a guideline. But normally Vita and I wait until after the home inspection, which she'll get into with you, is completed and that the sellers agreed to make the corrections or to improve the property according to whatever it is that you all ask them to do when it comes to the home inspection, which identifies defaults in the property in any way. That's that at that point, because again, the appraisal costs money, so does the home inspection. If the seller's not going to move forward doing the repairs of the house, I don't really want you to have to pay for an appraisal that we're never going to use, okay? That's why the home inspection first, then the appraisal. Once all that goes into the processor, we submit it to underwriting. Underwriting approves it. They always want something else, whatever that may be. Once that comes into play, you get that over to the processor again, and then you get what's called clear to close. And there are 3 best words in our real estate industry: clear to close. Second, the 4th best word is we're ratified. So we're ratified, that's a great word to hear, meaning your contract's accepted, everybody's on the same sheet with the contract. And then next words we want to hear is clear to close. Clear to close means we've disclosed to you. Remember, in the beginning, we're doing estimates. Now we're down to the final numbers. You get that number from me on your CD, your closing disclosure, and then 3 days later, you go to settlement. And at that time, you now are a homeowner, okay? I just want you to understand that process, what that process is. Now, I just want to backtrack, and then I'm going to turn this over because I tend to talk too much. And I'm sorry, Vita, but I want to talk to you a little bit about if the credit's bad, okay? If the credit's bad, and we don't even get to the point there. We got to fix the credit. Can't go out shopping until the credit's fixed. I'm going to look at the credit in great detail. And I know Vita will touch on this. If there's something in there that I can fix, then I will tell you what it is you need to do to fix it. If it's to the point where it can't be fixed by me, then Vita works with a very strong credit repair company, and she'll get into that. But we're both on that in terms of what it takes. Sometimes it's a very simple fix. Other times it's not. And then at that point, you go to, you work it out with Vita, the credit repair company, and then they move forward. But we're always looking to improve the credit. Again, let's go back to risk. I'll wrap it up with that. The risk, the lower the credit, the higher the risk, the higher the rate. So you may qualify with a 660 credit score, but a 680 may take it up even higher. Okay, let's see here. Current credit scores that are needed today, 640 today. That's for an FHA loan. That, I'm thinking, Vita, that's going to go up, go down again, probably in the next, maybe a week. Everything's starting to pick up. Things are picking up. The market's already strong. But I think in terms of the pandemic, the investors are feeling more comfortable. So I think that will go back down. 6 weeks ago, we were doing down and low as 580. Of course, 580s, you better have some money in the bank and a documented rent. You're not going to really just jump on a 580 credit score no matter what, whether there's a pandemic or not. Some of the things got to make sense. If you go interest rates right now on an FHA loan with a 680 credit score, we'll be looking at 2.75, extremely low. I don't know how much lower they're going to stay down there, probably for a while until the economy turns back up. Conventional with low down payments in the low 3s with a good solid credit score. Again, conventional requires, you're looking at a 700 credit score to really do conventional. Oh, I want to touch one other thing. A lot of you student loans, all right? We need to talk about the student loan factor. There's conventional financing is the only one that has what's called an income-based student loan, income-based payment student loan procedure. That income-based student loan procedure means that whatever the student loan people say that you have to pay, even if you're in deferment, we have to count something. But if they're saying income, if your income, I had a dentist who came out here, $300,000 in student loans. A normal procedure would be to count 1% of 300,000. Well, that's $3,000 a month that we would have to count at 1%, and he was only making 6,666 a month. Basically half of that debt, even though it was deferred, was counted against them, and it created a situation where it wasn't an easy thing to work out. But there was a loophole we found, which was called income-based payment plans. Okay, so don't be afraid my point is, don't be afraid if you have a high student loan balance. A lot of lenders don't know about the loophole. We do here. It's perfectly legitimate in terms of what we do. It's a guideline that's in that small print under Fannie and Freddie, and we're able to take care of that and get around it. Let's see. All right, great question. Let me repeat it. I guess everybody got to see that. All right, you go with on credit scores, you have TransUnion, Experian, and Equifax. You always go with the middle score. So let's say TransUnion 700, Equifax is 680, Experian is 600. Throw out the high, throw out the low, 680 is what we'll be looking at. If you have two borrowers, it's the lowest middle score of the two borrowers. So the best borrower is taken out of the equation in terms of credit. The best credit is taken out of the equation. And then you go to the lower credit score borrower, take out the high, take out the low, and you're going with that middle score. Okay, great question. All right, I'm glad I made you laugh. You must have the highest credit, Devon. Any other questions at this point?
So guys, if you have any questions, you can unmute yourself and ask the question. Okay, so if we don't have any more questions right now, I will proceed on. Again, thank you all for coming. And as Joe was saying, that you have your finances have to be in place before you can move forward. And the thing with purchasing a home, as you all know, is that you must have your credit score in place. Or if it's not exactly where it needs to be, we can get that done. Or, and the other thing was Joe was saying that if your credit score, if you don't have the history in your credit score that you need, because you need history in your credit score, he can help with that too, with alternative solutions. Let me talk a little bit about your credit. So you heard him saying that right now it's 640, but, and I believe just like he stated that in a couple of weeks, it's going to go down as far as the requirement as what's needed. However, you do need to build your credit. I have, if you have credit issues, you can chat with me about that later, but I have an awesome team that I work with as well as far as repaying your credit. Excuse me. They can repair your credit and get you where you need to be, and at least in 2 to 3 months if your credit is not that bad. If it's kind of really shaky, it's going to take a little bit more than 2 to 3 months. It's probably going to take at least 6 months. And so I'm saying if your credit is around 500, 550, they can get you up there in 2 to 3 months to get you where you need to be. The other thing, like I said, with the credit, with your credit health, 30% of your credit, what a lot of people don't know, is basically your credit cards, okay? 35% of your credit, your FICO score is based on your payment history, basically how you pay your bills. These things determine your credit score as well as your age of your file, how long you have your credit. If you heard Joe say, he said they look at credit cards that you had for over a year. Okay, a lot of time you want to buy a house, so you can go get a credit card and you just got this credit card. Well, you really can't use it because you only had it for 2 months. And so we need something with a little bit more time on as far as the age file. But however, what some people do, and I wish they stopped doing it, is like you have a car payment. You've been paying this car payment for the last 3 or 4 years. You've been paying it on time. You want to buy a house, so now you in a hurry to close this account. Don't do that. Don't be in a hurry to close that account. But because that's one of the accounts that you need as far as the age of your account. That one will help to increase, that helps to keep your credit score at a high level. So things like that you actually really need. Just pay them on time and just be consistent, and don't try to pay it off if it's not necessary. Never ever pay any of your credit cards off. Don't close your credit cards, because what it'll do actually will drop your score instead of increasing your score. A lot of folks don't know that. They think, oh, I'm looking for a house, I'm gonna clean up all this credit. What you're doing is really messing up yourself. So don't do anything with your credit unless you're 110% sure that you're doing the right thing, or talk to somebody that knows all about credit. I know a lot about credit, but I'm not a credit professional. I don't profess to be. I'm not send it to the person that I know that's what they do. That's their job. But I can speak with you about it. I can speak on it. So with that being said, if you guys don't think you are where you need to be, and the market is really hot. You know, Joe was saying, you know, people are a little kind of iffy right now, but there are a lot of people out looking for houses. The inventory is still low, and that's the issue in a sense, is because if certain people are most people are at a certain level as far as how much house they can buy. And so if you're around between that 250 to 350 range, it's kind of hard when you find that perfect house that you want because somebody else found it too. Because like I said, a lot of people are in that same range, and then you have competition. And it's still out there. You know, you would think in this pandemic that it would be a buyer's market, but it's not. It's still a seller's market. And here in our area. Now, other places, not so much, but here in our area, it is. That's why it's imperative for us to get the best deal that we can when we go out there house hunting. And trust me, I will get the best deal for you. We will negotiate it, and we're going to give that person what their house is worth. You know, nobody's going to give away their house, and I tell people that all the time. You have to be fair. I want to be fair with them. We want them to be fair with us as far as what we're asking them for. With that being said, and so I'm going to tell you the process, and I'm also after this, I'm going to send you all a guide, a home buyer's guide that I put together And it basically tells you all the steps of purchasing a home. And I also have this item called the 10 Commandments of things not to do while you're in the process of purchasing a home. Okay. And so the first thing, like I said, you choose your realtor and you choose your mortgage broker. You got to do both of those together. And the reason why it's best to do it together. And so generally what happens is that, the person will come to me, tell me they're looking for a house. And so because I work with Joe and he and I have an awesome relationship together, we work hard for you. When I say we work hard, trust me, we do. I got you. He got you. Sometimes you might get irritated with him because he asks you 100 times to send that same document to him. But that's how it goes. For some reason he needed again, or he's asking you 100 questions about a certain situation that's on your credit report that he needs you to explain, because he has to send it to the underwriter and the underwriter approve it. So what he's going to do is he's going to think about all the scenarios where they may say, no, that we're not going to approve this person. So before he even get to that point, he think about all these scenarios and bring them to you and ask you to explain to him why this, that, or the other is going on with your credit, what happened. And that helps him to put a strong packet together when he's ready to send it off. And he almost 100%, I 100% guarantee from my experience with him that he's going to get you approved and get that house for you. That being said, and I ain't talking about the pre-approval, I'm talking about the actually approving you for that loan. We're going to closing and you have your house. That being said, so we work back and forth together. The seller going to be calling him, the listing agent going to be calling him, I'm going to be calling him, where they're going to be calling me about what's going on in this transaction. And 9 times out of 10, you guys would never ever know what the real deal is that's going on with the transaction, because it could be going crazy. But I would never tell you. All I will ever tell you that is everything is going fine. It's going smooth. We're working it out. And because we are, I'm a fierce fighter, and I love it, actually, to tell you the truth. And so I'm going to make sure that you get what it is that you need. So after you have go through Joe to start the pre-approval process, after we get pre-approved, and I will never take you out to see a home unless we pre-approve, because the problem with that is that you'll see a home, you fall in love with it, it's $30,000 over what you're pre-approved for, because we have estimated what you may be pre-approved for. That doesn't help you. It doesn't help you at all, because then you're angry with me. Well, why are you taking me to see this house that I can't buy? The thing is, and so that's why it's so important. The other thing is you find a house that you really want to put an offer in on it. They're not going to accept your offer. Nobody accepts offers without a pre-approval letter. It just is. They don't. They don't even look at it. They want your pre-approval letter. So it's a moot point to even start the process of looking. Now, I will send you houses. I will send you houses in a certain price range, so you can see what's out there, to give you an idea of what's out there, to give you an idea of what it is you're really looking for, because a lot of times you don't know, to give you an idea of what area you want to live in, because a lot of times you don't know. So I will send you houses to let you know what's out there, what can potentially be your home, but taking you out to see them, no, I won't do that. But after you pre-approve, we go out to see houses. And so what I do prior to us going out, I'll talk to you. I need to know what's your must-have, what's your needs, what you're looking for, what neighborhood you're looking for. And I tell people all the time, the most important thing in purchasing a house is the community. You have to think about what community you want to live in. You have to think about what community you want to raise your children in. You have to think about what community that you feel comfortable in. It's all, because I can always find you a house. I can always find a perfect house for you, because there's houses out there. So I can always do that. But the thing is that I need to know, how are you feeling? What you need? Do you need to live by a park like down the street from you? Do you need to live by a close elementary schools? Do you need to live by a high school? What do you need? What are your needs? And so we have to talk about that, what's important to you, and we move on from there. So I take you on tours on the houses. When you go see a house, they're called resale houses. Resale houses are houses that people currently live in or lived in or whatever. But then you have new construction or new build houses. Nobody ever lived in those before. And then you have for sale by owners. So what happens is that even with the construction home, you still need a real estate agent to go with you for the new construction. Please don't ever go to new construction by yourself, because that person in that offer, they can promise you the world, but at the end of the day, that they're working for that builder, not you. They're not looking out for your best interest. You always need somebody to look out for your best interest. And it doesn't cost you anything to have a realtor. You know, when you hire me, you're not paying me. The seller is paying me. They're paying my fee. Okay. So it's in your best interest to always have a realtor by your side. They're looking out for you. That's going to protect you. And so then we go out looking for houses. And then after we find a house, we find that perfect house that you love, then we'll do a contract. So we'll sit down and I'll talk to you. You know, most of the time we just doing this stuff via internet, phone conversations, as far as the conversations go. It's not necessarily face-to-face. But we'll talk about your offer. We'll talk about the offer, what you want to offer. I will give you a recommendation of what I think is a strong offer, but it's always up to you, because, you know, it's your house. It's you have to pay for this house. So you make the final decision on how much you want to pay, what you think a good offer is. And I'll tell you whether I think it's a good offer or not. And I always, even if I know it's a bad offer, if that's what you want, we'll submit it. And so then what happens is, sometimes if you try to lowball someone, and that's happened to me quite a few times, you go in a very low offer, they don't even respond, because you kind of slap that person in the face, you know, by giving them this lowball offer. They're not going to respond to you. I call them and ask them, you know, are you going to respond to my client? They don't even respond to me at this point, because they, you know, people actually get angry, because they say, how can you offer me $25,000 less than what I'm offering? I'm asking for my house. And most of the time the houses on the market, they are priced pretty good. And sometimes some of them are priced too high. So, you know, I'll do my research. And that's the other part, is that I'll tell you what the houses have sold for in that area. And for that size house, for that type of house, for that house with all the amenities that they may have, I'll tell you what's a fair price for that house, you know, and then you make your decision on what it is that you want to offer. And then they're coming to the point where, you know, a lot of times, you know, you may need closing costs. And so we have to negotiate that too. With the closing costs and what you want to pay for the house, you know, at the end of the day, the only thing the seller is looking at is their net. And again, I say they're not going to give away their house. They're not going to, you know, you put an offer in on a house $20,000 below the list price, and then you want 3% closing costs, which is another $15,000, you know, and they're looking at your offer. No, I think I'll wait. I think I can wait to get what I want. And so it's all about negotiation. It's all about common sense too. You know, you can't expect somebody to if they know that their house is priced right, and you know that I've told you that it's priced right, because I'm giving you the research to show you that it's priced right. Okay, be fair, especially if you love that house. Be fair. Okay, and then we write the offer. They accept it. Then we have to do something called an earnest money deposit. An earnest money deposit is generally 1% of the price of the house. So if the house is $200,000, that's $2,000. You have to put that up when we write the contract for the house, when we submit the contract for the house, because what that is, you're telling the seller that I'm sincere about purchasing this house, and I'm asking you to take your house off the market because I want to go through the process of buying your home. And so you're asking this person to take their home off the market so you can go through the process of buying their home. And that's what an earnest money deposit. So they do. They take it off the market so we can do what we need to do. And then after the offer has been accepted, we negotiate a little bit as far as the price that we submitted. Okay, the house is $300,000. You submit an offer of $290,000. They say, nope, we're not taking $290,000. You submitted $290,000 with 3% down. Nope, we're not taking that. We'll take $290,000 and we're not giving you no down payment assistance. And then you say, no, I need down payment assistance. Okay, so can we do $295,000 and 3% down payment assistance? And you know, that's what the negotiation is. We're going back and forth. And they might say, nope, you give me the full price of the house, I give you the 3%. So it's a give and take. You have to decide what's important to you. what makes sense to you as far as the monies y'all concerned. So that's the whole negotiation process as far as that's concerned. Your contract is accepted, everybody signs, and that's what we have, what Joe was saying, a ratified contract. It's a live contract, and time is of the essence. And so we have to get everything moving, especially if we say we're closing in 30 days. 30 days is not a lot of time to get everything done that has to get done for you to close on this house. It's a lot of paperwork that has to be collected. A lot has to be done. We have to do home inspections. We have to do appraisals. If there's issues with the home inspection, they have to fix the issues with the home inspection. If there's issues with the home appraisal, they have to fix the issue with the home appraisal. With FHA and VA, the appraisal can ask the seller to go back, and there may be some issue that they see in the house. There may be a structural issue or something like that. They have to fix it before they approve the appraisal of that house. So we can't move forward with that. So that's when I say time is of the essence. Everything is kind of moving kind of fast. And before you know it, is your time for you to close. And you say, Lord, it got here fast. But in the process, initially it feels kind of slow until everybody's throwing all this stuff at you because they need all of this from you. And so, you know, it's fun. It's a fun ride. You know, it's exciting, and it's nerve-wracking, and it's nervous too. That's why I'm here. I can be your counselor too when you need me to be, to listen to whatever issues you may have and address them. Joe is here for that too. You know, because at times you might have questions. I can't answer those questions. Only one can answer those questions is Joe. It's about the finances. Anything about the house, I got you. The finance, that's Joe. I've learned to stay in my lane. He stays in his lane. And we respect each other. You know, I'm not going to tell him how to do his job, and he doesn't tell me how to do mine, you know. But we need each other, so we have to work together. And so after that, after we do the home inspection, the appraisals, everything is great. We agreed on what needs to be repaired. They agreed to repair it. We move on. Then after that, everything is in Joe's hands. He tells you that's when you're going to be hearing from Dave as far as all these hundreds of documents, and he's trying to get you to the underwriter. Then the underwriter do their thing, and then that's when he was saying you get approved, and say he'll tell you the loan is approved. And then that's when we go to, after that, that's when we can go to closing. We go to closing, and then the title company will get in touch with you, ask you various questions, ask you for various informations. They want to know if you want a survey of the property. And the survey is basically telling you what your property lines are. They want to know, is this just your house or somebody else going to be on this deed with you? They need all this information. They're going to get in touch with you for this information. They need to know all the pertinent information about this house and who's going to be on the deed and all that kind of stuff. And then after you get all the information to the title company, you get your CD, closing documentation. You have to sign off on that, send that back to Joe. And 3 days from that, we can close. We can close in your house. A lot of times what I do too is that if I pretty much know that you can close on 30 days, but a lot of times I'll take my contract and I'll date it 35 days out as opposed to 30 days. Because a lot of times things can happen in 30 days. Some issue might come up that's on your credit report that Joe needs you to address before we go any further. You give us a few days, and I always want to give myself a few days to cushion it so we still can close when we say we're going to close. The reason being, sometimes a seller, and I've had this experience, a seller will say to you, hey, you were supposed to be closing on June the 1st, and now you're telling me we can't close to June the 5th. I need X amount of dollars per day because we're not closing. I need you to pay me $50 per day because we're not closing, because I still have expenses to pay. And so, of course, I'm trying to negotiate that too. A lot of this stuff is going down and you guys have no idea what's happening in the background until I have to address it to you. Because I'm trying to get them to understand, hey, we barely got any money, and I always say that. We barely got any money to get to where we are. Do you really want to just nix this deal over a couple of dollars? Really? They don't have money to give you. They're trying to find him money. And so 9 times out of 10 it works, and they leave me alone about it asking you for extra money and all that craziness. But it happens. Trust me, it happens because they get frustrated, and I understand. Then after that, we go to closing. You sign your life away. You have all these documents that you have to sign. It takes you about 45 minutes to an hour to get through them. The closing person will be there with you explaining everything, because it's impossible to read it all, explaining everything to you as you sign these documents. And I'll be sitting there whispering in your ear, and we talking and laughing and joking and all that good stuff while you're going through the process. And that's it. That's the step-by-step process. And you get your keys, you're happy, you go straight to your house right after that. And then we can, you know, we can celebrate. You can celebrate all that good stuff. So somebody want to know if the earnest money deposit refundable if the offer fails and set to settle. Yep. So the earnest money deposit is refundable in several circumstances. Say for instance, the home appraisal came back, and it was a lot of items on there, and I actually and I have something called a property inspection notice that I have to complete after the home inspection come back, to send it to the seller saying these are the things that we need fixed before we can move forward. You and I will go over this document before I send it, before you sign off on it and everything, so we can be in agreement as far as what needs to be fixed and what we're going to let go. Because to be honest with you, they're not going to fix everything, because some things are just superficial. The lamp is crooked or something. You know, some things are not, because the home inspector, will pull out all kinds of stuff that needs to be inspected, needs to be repaired or whatever, or noted. Some things he just note, and it's like 20 pages long. And that's his job. I understand it. He, you know, we pay him all this money, so he have to say that he inspected this house thoroughly. And I appreciate it and I love it. And so if the seller come back and says that, no, I'm not going to repair these items, and so you can walk away and you get your money back, right? Or if the appraisal, we've done the appraisal, the price come back, the house is 300, they said it was appraised at 290. The seller won't take it down to 290. They refuse to take it down to 290. You can walk away. You get your money back. Or now you won't get your money back if you decided that, hey, I changed my mind, I don't want this house. You don't get your money back. Because like I said, the seller took their home off the market for you. And that's kind of like a payment to him for the time he has invested with you in the process of purchasing this house. You don't get your money back then. Or you get your money back if the finances, you didn't get qualified, you didn't get approved for your loan. So you can get pre-approval, but you don't necessarily have to get approved when we're going through the process of purchasing this home. Something can happen that's drastic that they find, because when I tell you they go through everything, They find that why they can't approve it. So what Joe would do was send a letter and said that you were not qualified, you were not approved. And because he's sending me this letter saying you were not qualified, you were not approved, then get your money back. You can get your money back from that earnest money because it's not really your fault. You know what I mean? So you can get your money back. And that's how we can get out of the contract, because you're not approved. You weren't approved for that. Joe, you have anything to say on that part?
Yeah, that denial part, because we do have a financing contingency, so that protects you.
Right.
And DEDA always has that in the contracts, always.
Right.
Yeah. I can't really think of anything else. You said the appraisal, but also right. If they won't fix things on the inspection, yeah, then that'll eliminate it. But other than that, you covered it. Yeah.
And after that, yeah, and so that's the whole process of purchasing a home. I know we went through that pretty fast, but I tried to keep it at an hour because I know everybody have things to do. I'm here to talk. As I said, I'm gonna send you the home buyer's guide, as well as the 10 things that you don't do while you in the midst of purchasing a home. And also, if you want to see if you are right there to get pre-approved, I can send you the link to Mr. Niosi so you can start the process. It's an online application. As he said, it's just pre-qualification. And really with him, he doesn't really even do pre-qualification. He does pre-approvals. And so, no, someone want to know, what about the realtor? If I walk away, do I have to pay the realtor? No, as I stated, the seller actually pays the realtor, not you, okay? And so the seller is responsible for the realtors, and I will be called the buyer's agent. The seller is responsible for my fee, not you. And that's why I never get why people go to new construction and not take a realtor with them, because they're not paying for it, you know? And so you're getting this service free on your end, you know? But we get paid, and we don't do it for free, we get paid, okay? So any other questions? And I'm gonna send you Joe Niosi's. Joe, can you tell everybody your phone number, and I'm gonna send it to them as well.
Absolutely. Okay, it's 240-793-9300. Again, 240-793-9300. And Vita, I just want to say you covered it all.
I'll try.
You're doing it in a very short period of time, but listen to what she's saying. Big thing that she's going to give to you, and you'll hear it from me, and you're going to get the 10 items. I think she calls it the 10 commandments. Okay. Yes. Read that, because moving money around, going out and applying for new credit while you're in the middle of the loan, is just read what she has to say. I'll also be reiterating it as we move forward through the process. Once I go through your pre-approval, you'll hear things over and over. And I know Vita said, it's funny you say it, because, there are times like for example, when you were saying you may ask for the same thing over and over. Well, for some reason, when you say, I need a copy of your bank statement, all pages, and even though that page is blank, believe it or not, it's needed, So keep in mind that when we go through our process on the mortgage side, we're not going to ask for anything from you just to give you busy work. We're asking for it because we need to get your loan done, okay? And if you took a picture of it and scanned it to me, and I can't read the picture because it wasn't a scanned PDF, yeah, I got to ask for it again. So everything that we're doing is presenting it for an underwriter, and we want that to be as clean and crisp as we possibly can. So, that's how it works, okay? And again, please heed to the 10 commandments you'll be getting. Very important.
And sometimes he's had sometimes he might need you to write a letter explaining something. And Joe is really good with that. He actually tell you exactly what the letter must say to get it through the underwriter, to explain the situation, why you were late on something maybe 9 months ago. Because something happened in your family or whatever he tell you to do, just do it. That part I stay out of. Okay, trust me, he will get you in your house. Okay, and so he has closed some crazy deals for me that I just knew they wasn't going nowhere, but it happened. And so I enjoyed you guys. Thank you for joining us, and I look forward to working with each and every one of you and putting all of my energy and my expertise into assisting you and finding that perfect home just for you. And my number is 301-356-3395. You'll see it on my email and my other documentation that I will be sending you. Any questions? No question is a dumb question if you don't know. So ask. And you guys have a wonderful evening. And I thank you for joining us. And Joe, I thank you again.
Great job, Vida. Thank you again.
Thank you. Good night, everybody.
Good night.
Bye-bye.
Thanks.
Thank you.